Ideas. Pankaj, hi, good morning. Always good to have you on the show. Let's start off with Syngene first. Quite intrigued to know why exactly Syngene and what's working for it according to you.
Morning, Aisha. Aisha, we believe that the CRAMS industry in India is at an absolute inflection point. This industry is exactly where IT used to be in way back in mid 90s. And there's a significant acceleration in outsourcing of contract research and manufacturing by global pharma companies to Indian companies to optimize their cost, and which was one of the biggest reason for the big IT outsourcing wave, which we essentially saw the beginning in mid 90s and continues even today, and it becomes such a large opportunity. So we think CRAMS is a very large opportunity for Asian economies or countries where cost structures are significantly lower. And Syngene being one of the leading contract research company, not only out of India, out of Asia, is at a very pole position to benefit on this outsourced contract research from global companies. And essentially now they've set up a new manufacturing unit in Mangalore, which has received the regulatory approvals. And a few days back, they had the first long-term deal on that being signed by again one of the big global pharma companies, which is essentially a $500 million deal over a period of 10 years, which is very significant in the contract manufacturing space. And probably it essentially shows us the potential for Indian contract manufacturers. So we believe that one, CRAMS as a space can continue to grow at high teens over the next 10 years. And Syngene being one of the leading companies, not only in India but also in Asia, should be a big beneficiary of that trend over the next 10 years.
Pankaj, some would argue and say that look, pharma has not worked the IT way. It appeared that pharma would be the next IT, but there are pricing challenges, there are US FDA problems, there's this whole China angle. Unlike Indian IT, where we only compete with Philippines and some low-end work, for pharma, the entire global competitive landscape is very different.
Uh, I agree with some of these things, Nikunj, you pointed out. So especially if you look at it when it compares to China, the magnitude of outsourcing that needs to be done, China by itself cannot meet all the requirements of the world. And when it comes to contract research, essentially you need highly qualified professionals, be it PhDs in chemistry or biology, and those kind of skill sets. And where India scores very high in its ability to provide a very highly skilled talent pool on a consistent and a continuous basis at a much more effective cost. Secondly, there are issues around compliances, governance, because when you work with global pharma companies, they do share with you very highly confidential data and information. So it's also a question of trust and where India has an edge over China. And more importantly, more and more global companies are wanting to shift their manufacturing base outside of China to de-risk from China. So I think all of this works in favor of India when you compare it with China. So I think while in terms of absolute size of the opportunity, it is not as big as IT is, because some of the biggest IT companies now are already 15-20 billion dollars in terms of revenues, and they're still growing. But in terms of the nature of opportunity, I think this CRAMS industry is, from my experience of being an IT analyst over the last 25 years, is exactly at the same inflection point which I saw the IT in the mid 90s and the late 90s. If you go back to mid 90s and late 90s, some of the leading IT companies of today, Infosys and TCS, were there were companies all similar size doing $400 million of revenue. And we've seen what has happened to them over the last 25 years. So all I'm saying is we should not underestimate the growth potential. It's very significant.
Everybody is excited what Tata Motors is doing in the passenger car space. The CV cycle is in a natural uptrend. But when you look at JLR, you say, is it worth the risk? There is a China problem, there is a Europe problem, there is a margin problem.
I think what really has happened is the JLR in its current form is a very different JLR than what we've essentially seen over the last 10 years. It's an organization which has gone a 360-degree transformation, and a significant part of that work happened pre-COVID. Unfortunately, the supply chain constraints emerging after the COVID and the shortage of chips constrain them in terms of realize the full benefit of potential of the reorg that the organization is undergone. I think the current JLR as organization as it exists, it's an organization which is far more leaner and far more focused. So once this chip and supply chain constraints are resolved, which as it is are getting resolved and probably by the end of this calendar year should be normalized, I think we'll see the real full benefit and effect of a reorganized JLR, which is ready for the future. It's a JLR which is far more, as I said, leaner, which effectively means profitability will be far higher. It's a JLR which will be completely deleveraged in about 24 months' time. So, as a company, Tata Motors would not have any significant debt on its balance sheet. And it will be a company which will be far more market focused. Some of their new models which they've launched are already sitting on a very strong order book. JLR today sits on an aggregate order book of about 200,000 vehicles. Now, it's very significant for any auto company, and which essentially gives us a sense of the kind of unmet demand which is lying there in the ecosystem, where customers have paid token booking amounts and are waiting for deliveries, and deliveries are constrained because of supply chain constraints. So I think the next 5 years for Tata Motors as an organization and JLR will be very different than what we've seen in the last 10 years.
Okay. Your top picks, of course, being Syngene as well as Tata Motors and Pankaj Murarka. We've seen leadership, of course, come as far as the auto stocks go. 10% weightage on the index. Another sector which is expected to maybe end the year on top, and we've been waiting about it, and one of the best ways to play the capex cycle changing now is banks. Is that something that you're looking at? You've often advocated to use this volatility to build a long-term portfolio too.
Yeah, absolutely. We continue to remain positive on some of the larger banking names, because I think Indian banking sector as a whole is in a very healthy situation, if I may say so, because the initial apprehension that COVID will have a significant impact on the asset quality has not really played out, and these banks have managed the fallout of COVID very well on their balance sheets. So today we are at a stage where the banks are very well capitalized. The economy is showing very promising signs of growth. We already started seeing very strong signs of loan growth coming back into the system, which was completely elusive for the last 18 months. So now, not only working capital, but if you look at the corporate sector, corporate lending, then we are seeing uptick in term loans as well, which is a reflection of corporates making new investments, and we already see otherwise as well from our corroborative analysis that a lot of companies have announced significant capex plans. Consumer borrowing, be it personal loans or credit cards or home loans, have been very strong. Real estate sales over the last year has been probably highest month on month for most of the leading developers across India in the last 15 years, which essentially shows that there's a very strong pent-up demand that exists again in the economy. So we think the demand for loan growth is very strong, and some of the larger banks, which are very well capitalized and which have very strong asset quality on their balance sheet, will be a big beneficiary of this impending growth that lies ahead of us for the banking sector over the next few years. So we like some of the larger banks.
Interesting. Pankaj Murarka, always good to have you on the show and share with us some ideas that you think are going to work for the long haul. Syngene and Tata Motors on Pankaj Murarka's radar this morning.